Guys, Bradley tuning in with Toronto quickly becoming one of the fastest growing cities in all of North America. We asked the question, how much money does one need to put on a down payment in order to make a positive return? Before I get started, my name is Bradley Watson. We do videos like this every week to keep you up to date on the latest tips and tricks. And in this case, we want to do the math, but in some cases, it's just learning and understanding the market. If you're getting value out of our content or you want to continue to see this great stuff, make sure you hit that subscribe button and click the bell for notifications, because we do sporadically add additional content through the week and I don't want you guys to miss it. And also, you might want to share this. Once you get to the end of it, I think you're going to be quite fascinated and you're going to want to tell all of your friends. And if you haven't made it to this point of the video, I feel sorry for you, because there's really not a lot of channels that are putting out these numbers and this content. But for those of you who are going to stick around till the end, I know you're going to love it. In order to calculate how much money can be made in the condo space, we need to understand some of the formulas. And to keep it super simple, when we're calculating cash flow, we're taking our income, we're taking our expenses, and we're deducting them. And they're gonna leave all of this down to the mortgage, because the question today for you guys is, what size a down payment do we need? So on the income side, what does the average condo in downtown Toronto cost for rent? By the way, the average square footage is 797 square feet. That condo would rent for $2,400, which, if you think that's high, recognize that's an 11% increase year over year, and it's gonna continue to happen. So we're gonna get out of that rental space as quick as possible and get into ownership if we can. So that's our rent. Now let's talk about expenses. What are the major expenses that get hit? And I wanna name off three of the big ones. Now, I'm not even gonna count maintenance, because maintenance is kind of a fluctuating amount, but just your basic costs. Property tax, according to the City of Toronto, is $320 a month on your average condo. That makes up about $3,800 a year. If we were to assume $150 insurance, and then we were to look at now our condo fees. What are condo fees? Condo fees are 0.65 per square foot on average, which means a $520 additional cost to you as a person investing. So this is quite expensive, and not to mention our average condo price right now is $600,000. So we're not talking any small unit. They've really climbed over the last few years, which is our challenge here in coming up with what kind of financing do we need on this. So we ran the numbers, and if you were to take your $2,400 minus your total expenses of $990, that leaves us with, if we spend more than $1,410 per month on our mortgage, we're actually not making any money at all. And we've done previous videos on this, but I want to really give you the calculation on what kind of mortgage, in other words, down payment you need. Now, if we did the numbers, and I won't bore you with them, but it took us all the way to putting 50%, $300,000, I can't even get the words out, down payment in order for you to not even break even. That's for $1,420 a month. So this really speaks to me in what the rich are doing to get richer. If you don't have a 50% down payment, you really can't run a positive cash flow in the Toronto space, which is just sad. And so my question now today, knowing many of us aren't in a position necessarily today to have $300,000 in the bank, but yet we still know there's an opportunity for us in investing in the real estate world. The question is what else can you be doing? And I want to give you three things that you can do. Number one, if you're going to live there, if it's your primary residence, you get what's called a primary residence exemption. I would encourage you guys to get a multi-unit or a 2-unit minimum home where you live in the larger portion would mean no tax gains. And as you learn the tax, you could be paying 50% on an investment property. You can actually save that. So that's one avenue to get in. Number two is multi-units. Now, of course, they're gonna cost a little bit more, and it tends to discuss on where we're gonna be. Are we gonna be closer to the city? Are we gonna be further away from the city? But the main thing here is having multiple units means more rent. Having more rent means a higher cash flow. Now, if the rent can't be necessarily increased because we can't afford a multi-unit, then the third option we can do is we can go further away from the city. The further you go, the lower the cost, the higher the cash flow. And these are addressing both sides of the equation. But you know what? Some people say that they're actually comfortable with this loss because they know as they make mortgage payments, they have equity being built up as that mortgage pay down happens. But if that's not you, it really leads to this follow-up question, which is, what is the best type of condo for you to invest to get the best possible cash flow? Now, having studied thousands of condo units in and around the city, I always find that smaller units, we're talking 1-bedroom units or one in dens, tend to be the fastest for cash flow purposes and the best deal. So what's the solution to this? If you're an investor, you're looking for those units, you're looking for the 1 bedroom, but if you are a renter, advice to you, I would actually find a multiple bedroom home and split that if you can in order to get the best bang for your buck. So all of this comes down to an equation which comes with cash flow versus equity. The closer you are to the city, the more equity you're gonna get, which is a capital appreciation. It's 50% taxable, which is sweet, it's cheaper. Your income as you're charging rent, that's actually 100% taxable. Versus if you live farther away from the city, maybe you do one of these strategies where you pull back, your cash flow is going to go up, which is your income, which is higher taxable, but it's less risky. And your capital appreciation, that 50% tax rate at the time that you sell it, only is half taxable. That goes slower. So I know I'm kind of rambling a little bit, but I want to get in your head that there is still an opportunity for you, even if you don't have $300,000 sitting liquid and ready to enter the Toronto condo space. And I would love to help guide you there. If you want guidance and you want to learn, if you've watched any of my videos, you know the success I've had investing in these types of properties, and I'd be happy to show you. You can check out our website, watsonestates.ca, to learn more. Make sure, again, hit that like, hit the subscribe button. We're gonna continue to put out fantastic content. Let us know what you think about this. Let us know if we missed anything. What are the amazing things? We've got a lot of investors following my channel. I'd love to hear from you guys. What are some of the amazing things that you get out of having cash flow properties or equity properties down by the city? I'll see you guys next week with more tips and tricks. Take care and keep it real.